Today I'm going to go over everything you need to know to start investing in startups as an angel investor. Are you ready? Let's begin. Hi everyone, Vishai here and welcome to the channel. Today I am starting a new series and this series is going to be all about angel investing in startups. And the first episode, I'm going to be talking about how to become an angel investor. How do you actually start the process of angel investing in startups? And what are the things you need to know before you can start doing this effectively? Now, one of the things that I started to do in the year 2020 is angel investing. And after a year of doing this, I think I have more than one insight to pass on to you. Now, I'm sure there are other angel investors that have a much longer track record than me, and they might have different tips. So take into account that my advice is from my personal experience and it might not necessarily fit you 100%. So probably the first and the most important thing I have to tell you about angel investing, that it is a very risky business. Now, if you don't have money to spare and money that you're actually willing to lose for a huge bet, I do not recommend angel investing. Angel investing is probably one of the riskiest styles of investing you can take on yourself. As an angel investor, the minute I make an investment, I know that there is a slim chance to see the money again. And because of that level of risk, I created a checklist for myself that I try to fill out each time I decide to angel invest in a specific startup. Now, just because I have a checklist doesn't mean that I'm protected in any way. The risk is risk. You can sometimes have all the due diligence tools in the world, you can have all the knowledge, and still you will invest in startups that will eventually go to zero. So now that you're aware of the risk and you know that there is a slim chance to succeed as an angel investor to get high returns, let's start diving into what does it mean to be an angel investor. An angel investor usually invests in very early stages of a business/startup. And one of the stages that is well known in the industry is called the pre-seed round. This is usually the round where a company is trying to create a proof of concept product, something that they can show in a later stage to bigger investors in order to raise something called a seed round or maybe later a round A. Now, I know these words are maybe confusing, pre-seed, seed, round A. Don't worry, we're going to get to all of them and I'm going to explain them thoroughly. But for now, let's focus on being an angel investor on the pre-seed round. So as an angel investor in the pre-seed round, you're probably going to encounter startups that mostly have decks and maybe a proof of concept working product. And if you're lucky, 2 or 3 clients that are actually using the product right now. One of the more problematic things when you're investing in a seed stage startup is that no matter how much due diligence you do, there's not a lot of information you can lean on. There's not sales figures, there's not a clear roadmap to how much time it will take to reach milestones, and everything is in such an early stage that all the predictions can be thrown out the window at any moment. None of what you see on the slide deck can really represent a realistic scenario of what is probably going to conspire and happen in real life. So take that into account. A lot of angel investors mostly invest in the pre-seed stage based on a gut feeling. And that gut feeling usually is more related to the CEO of the company, the founding team, the industry that they're trying to address, the problem they're trying to solve in that industry. Those are the kind of things that if an angel investor usually relates to and finds interest and they like the team, those are usually the things that leads an angel investor to invest in a startup. When an angel investor is investing on their gut feeling, they're probably looking at the CEO/founder, the founding team, the industry that they're trying to compete in, the problem they're trying to solve, and looking at kind of what has been built until now and what is the plan to see if there's any kind of rationale. So a lot of gut feeling around the process of investing as an angel investor in the pre-seed stage. Now, in the pre-seed stage, many startups don't like to talk about valuation. And that's when 2 different types of investments come into play. One of them is called the safe investment, and the other one is called a convertible note. A safe investment round is the kind of round that helps the investor and the startup team to create a deal fast without having to go back and forth around the topic of valuation. The discussion around valuation can take time, and that time could be easily used for pushing the product forward or trying to gain some more traction with new clients. You don't want to be in a situation where you as an angel investor and your negotiation are actually hurting the business that you're about to invest in terms of what they can achieve with the time they have. Time is a very precious resource in this stage of a startup. So remember, you want to close a deal as fast as possible as an angel investor. Obviously, after you did your due diligence and you feel comfortable, but still, this is something that I want you to take into account. Now that you have heard the term safe investment, it's about time to talk about what it means. A safe investment is the kind of investment where you put money now and we talk about valuation later. But that valuation we talk about is kind of in the contract. So let's say a company wants $1 million in a safe investment round. They're either going to give a 20% discount on the next round, and then those $1 million will be invested as if there was a 20% discount, or there will be a maximum cap, meaning that even if the company raises at a valuation of $10 million, if the cap on the safe investment was 5, those $1 million will be invested as if the valuation was 5, giving the investors more stake in the company. Now, there are all kinds of scenarios that can play out when you do a safe investment. One of the scenarios is the company never actually reaching the next round. And you have to take that into account, that a company can sometimes run out of cash and your safe investment is basically dead in the water. So again, angel investing is a risky business. Now, I personally, as an angel investor, much prefer to put money inside equity rounds because it gives me more of an incentive to try to help the startups on the strategic level, just because I understand what kind of exposure I have to the success of the company. When you're doing a safe investment, it is sometimes limiting you to understand how much are you actually in the same boat with the founder. If you put in a safe investment and it's with a very high cap, then sometimes your investment is going to be very minimized and you might not have much equity after the next round. So I much prefer to invest directly in rounds where I know the valuation and equity rounds, but sometimes in the pre-seed stage, it's not the best thing to do. So just kind of a side note. Let's continue to talk about what other kind of rounds there are in angel investing. And after the pre-seed stage round, there is such a round called a seed round. And the seed round is usually when a startup already has a working product, maybe in beta. It's a bit more mature than a POC. There might be some paying clients and there is some traction, maybe some monthly recurring revenue or some contracts in place with big companies. So the seed stage usually is a stage where you start to hire your first or second employee. In addition to hiring employees, you start looking at venture capital opportunities in addition to looking at angel investors. Angel investors come in all shapes and sizes. Some of them write checks between $10,000 and $25,000, and some of them write checks from $25,000 all the way to $250,000. So you have to take into account that when you're in the pre-seed stage, there might be some angel investors that will not want to write a small check. And when you are in the seed stage, some angel investors would rather write small checks and have other angel investors write small checks alongside them, just because they don't want to fill the full allocation all by themselves. It's very rare to see an angel investor join in a round A because usually round A's are bigger and they have much more VCs taking a stake, and there's not much room on the cap table to put in an angel investor in such a round. It's not that it doesn't happen, it sometimes happens for strategic reasons, but take into account that most round A's will not have an angel investor in them. But let's say you have the opportunity to invest in a startup that's either in the seed stage or round A stage. You're supposed to have much more information than investing in a startup that's in the pre-seed stage. And here between the seed stage and the round A is where we as angel investors have to be very diligent in our due diligence. We need to be able to have access to a full data room that shows us exactly what the startup has been doing, what's the plan for the future, what's the hiring plan, what's the expense. You should be getting a bunch of different pieces of information from the startup you're investing. That includes usually a income expense sheet. It includes a plan for marketing, sales, R&D, and etc. And it should include a full cap table and how many options are going to be allocated for employees and consultants down the line. Now, me personally, before I even see a seed stage or around a investment contract, I like to get access to the data room, and usually it will require me as an angel investor to sign an NDA, and I like to go over all the information to make sure that what I am about to do with my money is after having all the information, and I'm going with my eyes open into invest in a startup that has a low percentage chance of success, but still I am a different kind of investor. I like the risk. I like the founders I invest in, and that's why I do it. But I always do it with my eyes open. Now, I want to take this video as an opportunity to tell you about my first investment round, and maybe from it you can learn a bit more about how to start angel investing. So my first investment round was in a company named Dialogue, and Dialogue was probably the best first investment I could ever ask for myself, because I got an amazing founder and a very dedicated team from day one of the investment. And they also knew how to utilize me as an angel investor. I'm what is called a strategic angel investor, or in other words, I'm not dumb money. Because I have a lot of experience in the world of marketing, they're tapping into my knowledge base and using me on a daily basis to try to improve what the team is doing right now. Now, it's not that I'm working at the startup. Trust me, they're doing an amazing job by themselves. But I'm used often as a sanity check. I come to brainstorming sessions, and it just gives whatever marketing effort they're doing a positive kick. And sometimes when somebody sees things from the outside, they have impressive feedback to give to people who are kind of day to day inside the work. Now, what I loved about Dialogue was that they hit the checkbox I was looking for in terms of the industry I wanted to be invested in. I wanted to be invested in the e-commerce industry, and Dialogue is the kind of startup that allows every e-commerce store to power up their sales, and it is done with a few clicks of a button. So that checked my box because they were giving real value to e-commerce stores, and the kind of value that usually you would need very robust, technical, very complicated tech. Dialogue kind of put it all in a very small size solution that every store from the biggest to the smallest can use with ease. And obviously I'm a bit biased here, but in the end of the day, their client list speaks for themselves and the company is growing. So bias or not, fact, good startup that has a good future ahead of it. So we spoke a bit about the risks, and we spoke a bit about the different stages of a startup, and I told you about my first investment in the world of startups, which is Dialogue. Now I'm going to talk to you a bit about the patience you need in the world of angel investing. If you're going to be an angel investor, you have to be ready to be very patient. You're currently doing investments that are not liquid. You might not see your money for a very long time. And if you are looking for a low, steady return that you can take out at any moment's notice, angel investing is the furthest thing from what you're looking for. If you're looking to invest money and to maybe see it back in 10 to 15 years, then I can say that angel investing in early stage startups is much more down your alley. And even if those liquidation events kind of present themselves, if you are currently in a winner startup and you have the rights to invest again and again in further rounds, you might want to do that. The best angel investors with the best track record in the world swear by let your winners ride mentality. One of my favorite angel investors is David Sachs. Another one that I really like is Jason Calacanis. And you can watch both of them in the All In Pod, which is a highly recommended podcast. And I recommend following them on Twitter. They have very interesting track records, and they both invest in C to round A stage startups. And I think that there's a lot to learn from them. And if you want to see how a angel investor looks like after a very successful track record of angel investing, Jason Calacanis, David Sachs are good examples. Here are some things most people will not tell you about angel investing. Number one, you have to work all the time on building your reputation. Now, when you start angel investing, there are not going to be deals coming out of nowhere. You're going to have to work hard on something that's called your deal flow. Your deal flow is basically the kind of startups that come knocking on your door for your angel investment. And usually when you start angel investing, your deal flow will not be a high quality deal flow. A way to hack your way to better deal flows is to actually start tapping into other people's deal flows and have them share them with you. So if you have connections with other angels, start talking to them so you can get some of their deal flow directed towards you. Another thing that most angel investors will not tell you is that at one point or another, they have invested in something based on a hype. And most angel investors are not 100% disciplined throughout their whole career. Every investor has probably had at least one time they invested outside of their checkbox list, and you want to be mindful that no angel investor is perfect. So don't hit yourself too hard if you ever invested based on a hype and you invested in a startup that did not hit all your checkboxes. It happens. Sometimes your gut feeling just pushes you to do things in a different way from what you're used to. Another thing most angel investors will not tell you is that it is much harder to think about what can go right, and it's way easier to think about what can go wrong. Most angel investors will say often the word no to startups rather than the word yes. And the reason that happens is because it's very hard to say yes in this business. Most of the pitches you're going to get are not pitches that you're going to like or feel comfortable with. That's what makes angel investing so interesting. Some startups and some angels just have a good match, and others just don't. Another thing most angel investors won't tell you is that to become a super angel with a name and to have any kind of fame is a very slim chance. There are only anywhere between 10 and 20 super angels that you might hear about as a startup founder. It's not like celebrities on TV and movies that you can remember 50 or 100 actors or actresses, models. Most angel investors are not rock stars, and the ones that are usually stay rock stars for a long time, and other ones have a hard time reaching that status. So don't expect to become famous from angel investing. Another thing that you might not hear from other angel investors is that there's a higher chance of you being a successful angel investor if you are a startup founder or CEO in the past. It is not easy to invest in startups without being a part of one in your long history, or maybe short history. If you have experience in startups, then usually you will have that sixth sense in order to invest in the right ones. So don't hit yourself too hard if you have never worked in a startup or started a startup and that your track record as an angel investor is not the best. Yes, you can be an angel investor who has never worked in a startup before or started a startup. It's a possibility. Yes, you can beat other angel investors in returns, but because the world of startups is so unique and it's very different from the world of regular small and medium business, you have to take into account that you're coming with a bit of a disadvantage. Even when trying to connect with a founder in the initial stages of the investor-entrepreneur relationship, you're going to have a harder time connecting with them if you did not come from the world of startups. One of the last things I want to tell you about angel investing that most people will not talk about freely is that most angel investors have invested in a startup at a valuation they feel uncomfortable with. A lot of angel investors have put money in startups where they didn't agree with the valuation, but they wanted to be along for the ride. So take into account that a lot of times you might pass on the deal because of valuation. And if you decide not to pass, even though if you don't like the valuation, but you like everything else, it's fine. It's not a bad thing, and you should not be kicking yourself for it. So I think we covered enough bases for Angel Investing 101. I obviously didn't cover anything around the world of syndicates, AngelList, thesyndicate.com, and Republic.co. These are topics that I'm going to be talking about in a future video about angel investing. So don't forget to subscribe to the channel, hit the bell for notifications so I can give you much more information about the world of investing. And if you like this video and you found it useful, hit that like button, and I hope to see you again next time. Thanks for watching.